Hey folks, Vic here with your weekly trade video for Friday, October the 17th, 2025. I think it's safe to say that the markets have been a bit wild lately. Big sell-off last Friday. Tariff threats, political noise, global tension, you name it. Uncertainty like this shakes most traders, and the markets don't like this kind of uncertainty either. But it doesn't shake us. In this video, you're going to see Darko's pre-market analysis from Monday, October the 13th, where he called 3 trades in advance, as he always does. It was the Australian-New Zealand dollar pair, the Euro-Aussie, and the Aussie-Swiss, all now solidly in profit. Each trade was based on our one proven pattern, the swing break. We've talked about this for a long time now. And in this PMA, Darko reveals another powerful version of that pattern that every serious trader should understand. It's still a swing break pattern, but just a little bit different version of it. Before we jump in, I just want to share a few quick comments from our members. These are real traders seeing real results and trusting the process, okay? These came in just yesterday. I'm recording this on the 14th of October. Got these just yesterday, and they say it better than I ever could. Just take a look here. Let me just bring up, I put them onto a Word doc right here. So I didn't show their names. I never asked them if I could. I always like to get people's permission. But anyway, this person said, your hard work and leadership simplifies a complex market. I love it. And the CC community, I'm not going anywhere. Your honesty, this person says, your honesty brought me into this amazing community, and I love being here. I plan to stay even as I become a stage 4 trader. I will be here. Thank you, Darko, for your hard work. This person said, this is by far the best and most genuine community I have come across in my 3-year journey. It's real life, real trading, and most of all, real coaching. And then finally, this is actually one of our scalp traders here. He said, thank you. What he did is he actually identified a real nice scalp trade today. And he took the trade, and I congratulated him on it. I think he got about a 2-to-1 reward risk on it. And he said, thank you. It's all from yourself and Darko. Well, you know, we show everybody the same thing, but it takes each person to embrace it and actually apply it. So he's just doing a great job. If you're ready to put in the work and follow a proven plan, we'll be very happy to guide you every step of the way toward becoming a consistently profitable trader. All right, let's get into Darko's PMA.
Hi everyone, Darko here for your weekly PMA for Monday the 13th of October 2025. Hope you have a great weekend. Be aware of red flag news, it's super important. So let's dive in. I have lots of stuff to cover. Before we start, yesterday's move, like Friday's move, when we were involved in some of the trades, let me go to the S&P. Okay, so this is fundamentally correlated. Okay, this has nothing to do with the technicals, because I actually got a text message from my son. He made me aware of the stuff that's happening in US. Trump wrote somewhere that he will be increasing or threatening to increase tariffs on China goods. So these fundamental news this will be the results. Price will be heading up, down, up and down in a very aggressive manner, and that's something that I made everyone aware of, by the start of the year. So I have lots of pending orders, and here's the thing: what happens around the world, that's out of our control. What we can control is what the market is providing us. And there will be time where trade goes against us. That is just a normal part of the game. So there's nothing we can do about what happens in the US or in Middle East or anywhere else in the world. We just focus on what we can control. So for Aussie CAD, we had a pending order in here. We got filled. Okay, and when I type in the chat room, and it was not related to Aussie CAD, it was Euro CAD, if I'm not mistaken. So when I type, I moved my stop loss to break even, and someone typed, hey, over here price has not touched the break even. That's completely fine, because we all see the same charts. So my chart is identical with everyone else. Okay, so when I type something like that, first and foremost, I'm always on the run beside doing the PMA. So that means I only have time to type short messages to give you a heads up. Okay, so when you place an order in the market, you place an entry, you place a stop loss, and you also have a limit. A limit means that where price will be taking profit for you. Okay, so when I say I moved my stop loss to break even, is that I'm changing the limit order to my entry. So if price goes up, then price will stops me out for break even. That what happen on the euro CAD trade. Okay, so maybe I should just change, instead of stop loss typing, I change my limit. But then you need to understand what limit is, or at least what I mean by that. So in this specific case, I have also changed my limit to this level. I highly doubt that we will be getting stopped out for break even, but anything can happen in the market at any time. What I do think is that price will be heading down and getting us stopped out for a full loss. Just have in mind we have 2 trades yesterday with CAD in it, so the risk is exposed. So that means one on Aussie CAD and 0.25 on Euro CAD. Okay, so this is the risk we are taking. That means we are risk exposed, and if there is maybe 3 or 4 with CAD in it, we still only risk, we don't make this lower. So 0.25 is the lowest point we go. Okay, so in this specific case, we will probably be losing 0.25%. That happens. It's not much we can do about. And nothing has changed for Aussie CAD. My bias is exact the same. Actually, let's just remove this now. So let's see what the market opens, if we got stopped out or if we get stopped out for break even. I moved my stop loss to break even. Okay, so nothing has changed. If you go back and re-listen, we had 2 levels on a monthly chart. Now we are heading to the next level, and then once price hits that level, this is a monthly level, we might very well be coming down to the weekly level, which is slightly lower. We will be waiting for a 4-hour structured damage where the buyers will be in control. Okay, so that is my game plan for Aussie CAD. Aussie Swissy, I'm glad that I didn't watch any long opportunities on this pair, because this is obviously heading down. Now price is telling us with this weekly candle action that the sellers are now in control. Okay, geez, my so annoying with my mouse. It only happens when I'm pulling the record button. Otherwise it's working perfectly fine. So okay, so why are we making this into a pending order? Someone typed me a message about helping them with a game plan. Well, the entire game plan is covered in the PMAs. I'm drilling it every time we have a pending order. We use the yearly for the bigger picture, monthly, weekly, support and resistance and trend. Daily and 4-hour is our entry time frame. Hands-on, hands-off trade management, depending if you are going with or against the trend. We have our entry from running by 5 pips, 25 pips for the stop loss. Okay, and then we have TP1, TP2, and when price is leaving, we risk reduce. That's it. So a game plan should not be an essay from university. Just like, make it simple. Don't make it too complicated. So it should be super simple. Okay, and then how you identify trend, how you do all the detailed stuff, that. You just need to know, like, hey, this is my overall game plan, and then when price hits a certain level, I know exactly what to do. Okay, so in this specific case, beside the weekly candle action, that is weekly and monthly candle action for those who are new to the service, those are showing you a direction of the week, what the institutional market movers, market makers, banks, all the big dogs around the world, where are they heading? Are they selling or buying? So that's what the monthly and weekly candle action tells you. Okay, those are super important. So when we left this area here, after hitting resistance, we are making lower low, lower closes. Okay, this low is closing below this low, and I know that this swing is not higher than this swing, but like I tell you, there are two types of swing breaks. The one I usually show you, when this low is lower than this low and this high is higher than this high. And the second one, this is number one, and then number two is when price is continuing in a direction that is underlying. We are making a new lower low, lower closes, or a new swing break. Okay, that is the second way of identifying swings. I will show you that in, I think it was in some other pairs. Cat Swissy is a good example of that. Maybe this one is not a great example of showing that. The sellers are in control, and the 618 fib coincides perfectly with all these resistance becoming support. Let's see if the market is actually coming down, up to this level. And if the market continues down, okay, let's just say that you have the Sunday opens candle and Monday opens candle is lower, then you just adjust the fib until we get that pullback. Okay, it doesn't make any sense to leave this in here and price goes down. Then it's not the 618 fib of the entire swing move. So that's super important. So adjusting the fib until you get the retracement. Okay, in this specific case, I will cancel my trade if price hits this neckline before heading up again. Okay, because like I said, we have 6 candles within the bigger candle. That's a warning sign of retracement. But the problem with this neckline, it's different number for different data feed provider. For Uanda, it's 5127. For ICE is almost the same. That's not a problem. But the FXCM that I trust, that level is almost to 5116. That is a significant change in the neckline. Okay, so you might say, but Darko, which one are we using? Let's just stick to Uanda. If price hits this level before getting fill or getting any close to it, we will cancel this trade. Okay, so this is a pending order on my live account. I will be disregarding anything with yen in it. I'm not trading those pairs right now. I'm leaving those alone. Aussie Kiwi. Okay, monthly, weekly, identical neckline. Okay, the trend is up. Yes, that means opposing levels comes handy. You have to be aware of this. The first opposing level that makes sense to me, that is in front of the price, is this one down in here, which price respected perfectly. Okay, so I don't see any legit threats to my trade until we hit that level. On a weekly chart though, there are some levels in here. We need to see how price is respecting that level, like a swing break like this, a significant neckline like this. The highest one that I truly trust is this one in here. Okay, so that is the highest opposing level. Opposing level means the level that is in front of your order. Okay, so if price hits this level before getting me filled, I will cancel the trade. And if this goes down, you need to adjust the fib with it until you get the retracement. Okay, I'm trying to be over clear, so there will be no misunderstanding about, hey, do I need to adjust the fibs? Do I need to do this? Is the trade canceled? You need to listen to the PMAs. Okay, so no questions will be answered in the chat room that is actually answered within the PMAs, because that's so super time consuming. So that's super important. Okay, we adjust the fib if price is dropping until price is retracing to our entry, because we are trading the 618 fib of the swing. So the swing doesn't end in here, it's ending in here because it's weekend and the market is closed. If price is dropping, well, the 618 fib needs to go with it. Okay, this is another pending order. Aussie dollar, actually let's just change this to red. Moving this away. I will be showing you lots of trades that is dollar correlated with the dollar index. So I'm leaving this there. It depends by the time dollar index retraces back to support. If there is no tweets, if there is no anything that's happening or being said in US or anywhere else, there is no nuclear bomb exploding somewhere in the world, or someone is threatening to do anything, well then those are valid trades to be taken. Okay, so yeah, we keep these I wouldn't say pending, but it depends what happens in the world by the time we hit our entry level. Okay. CAD Swissy is, there was a question about CAD Swissy. Say, hey Darko, I don't see any swing break, but you are having this as a pending order. Great question. This is the type 2 of swing breaks. Okay. The trend is clearly down on yearly, monthly, weekly, daily. Everything is down. Okay, so that is the criteria. We have an underlying trend, and then price, when we left this area, price is telling you that we are actually taking out all these swings. The sellers maintains in control. By the time we made this into a pending order, price was down in here somewhere. Okay, so this was the swing, and now we have another swing. So if this comes down, takes out this swing, then we need to see if we need to adjust the fib from this to be the highest point and this to be a lower point, and then we just take a retracement down, because price is too weak to take itself up to pick more sellers. Therefore we are not touching these levels, because this was a perfect trade back the times when this is happening in here. Yes, we were aware of this, but that's a different story. That's more like a trade management part of the trading and not much about the trading setup itself. The trend is down. You should be looking for selling opportunities. So when we left this area, we took out the swings. Let me remove the clutter. Actually, let's just remove this as well for now. Let's just say that this is heading down and making a new lower low, lower close, or taking out this swing like significantly. Then the charts will be looking something like this. Let me see. Can I make this? Let's see if I can. Yeah, perfect. Thank you, TradingView, for your cooperation. If something like this happens, and this is the 4-hour time frame, okay, 4-hour time frame, price is heading down like this, like no tomorrow, and the daily chart looks just like this, just more scalable to the up, less candles, because this is 4-hour than the other one is daily. Now when we left this area, we took out this swing in here with conviction. It needs to be with conviction. So that's still type 2 trading. And now when price comes up in here, then we just draw off. When we see this retracement, that's when you draw the fib from the highest point to the lowest point. 9 times out of 10, the 618 fib coincides perfectly with the level of support and resistance. If not so, if we don't see any clean levels of support and resistance, we just take the 618 fib. Sometimes, like if this goes down to here, okay, to here, then this looks more like a 50%. Then when we draw a fib, the 618 fib doesn't make sense, because it's not at it's when price is starting retracing, price will probably be retracing back to a level of resistance before dropping further. Then you need to make your decision as a professional trader to ignore the 618 fib and take the 50%, because that's what makes sense. The fib itself, the market couldn't care less about the fib. It's usually about support and resistance. The reason why I created that 618 fib entry is because when you are a struggling trader, you don't see the trading logic things, and you just need to be objective, like, hey, just give me one number every time to get filled, and that's all I need to know right now, because I'm super overwhelmed with every information. My brain doesn't take 1 inch of any more information that is out there. I want this to be black or white. Well, that's the black or white type of entry, and then you will be missing this one, and you have to be okay with that, without adding more mental challenges to your trading, the mental capital. And by the way, it seems to be missed by some of the clients that we are actually recording episodes each Monday since September. So I asked this trader to actually listen to the PMAs, the podcast. We talk about trading. We talk about the mental part that I don't have time to cover within these PMAs, like fully, the full version. So make sure that you listen to all of the previous episodes, but also each Monday there will be a new episode until end of January. Okay. So this is still pending from the level that I showed you here. Okay, so this is still pending. If we make a lower low, we cancel this trade and we regroup for next week, or maybe for Thursday. Okay, so if we make a lower low, we will cancel this trade, because the entire idea was for this pullback to get us filled and then drop. But price is dropping before this level because price is too weak. Like I said, all time frames is heading down. Okay, I wouldn't put any emphasis on the 4-hour time frame, but daily is the lowest time frame we look for more a quicker trend. Okay, nothing on CAD yen, Swiss yen, dollar index. So for dollar index, price did not came down to our original level. Now what do we have? We have that type 2 swing breaks. Okay, when we left this area, we made a higher high, higher close above all these swings. Okay, all these swings now price is telling you that we are in control. That doesn't mean that dollar will be heading up. Like I said, I'm watching this level. This level is the line in the sand for dollar. Anything above it is long, anything below it is short. We obviously have this level as well, which is slightly higher. Okay, so I'm watching the higher time frames. This is one of my rules that I added to my performance and discipline, is to make a yearly top down for myself twice a week. Okay, so that's what I'm doing, because that's context, and that's something that we drill in these episodes. That actually I didn't say that, but you said it in the episodes that I was recording with 18 of my clients, and this has not been released yet, where we talk about context. And this is the one thing that I'm still trying to improve after 20 years. So don't think that you will be understanding context in 3 months. No. You will have a understanding for it, and it will make you money on a consistent basis, but you will evolving that skill along the way. So what I'm saying in here is that dollar, and here's a great example. The 618 fib is just like price could very well be coming down here, but there's like no logic, trading logic that is, which is opposite to everything outside of trading, that price will be reacting from this level. Like why would price come down in here? There's nothing in here. And sure, price could be coming down to the 618 fib and then heading up, but the more logic is that we will be reacting from this level. So when dollar index comes down into this level, that's where you go. Like by the time we touch this level, what is strong, what is weak? Then you go to Aussie Kiwi, you go to Euro Pound, you go to those who are actually telling you which one you need to take. And those are pending orders, but pending orders with criteria that nothing happens around the world. At the same time, dollar index hits that level. Okay? So that's what I mean, that sometimes, but the 618 is the golden ratio. If you Google golden ratio, you will see, and someone sent me a very interesting research about the fibs and why the 618 fib is always working. And when I say always, that means 6, 7, 8 times out of 10. There's nothing always that means 100 out of 100 in trading. That's super important to accept. You understand it, but you need to accept it. That's a different story. Okay. Euro Aussie. We have the pairs where there's like 6 months of candles is within the bigger candles. Okay, that means a warning sign. We need to be cautious. Okay, but like I said, now we have a weekly 100% bullish candle action. That makes sense. Okay. And in this specific case, we also have daily structure damage. That means this low is lower than this low, and this high is higher than this high. Okay, that's the type 1 of swing break. Type 1. That's the one that we mostly trading. Okay, so having the big dogs, giving us direction. The only problem with this one, my experience, is that price comes down to the closing price of the neckline that was reborn, and this is also another neckline, but the risk reward makes it a bit iffy. Therefore, I'm sticking to the 618 fib. That makes also sense within the daily necklines. Okay, there's a neckline in here, there's a swing neckline in here, but price might be continuing up. Then I need to adjust the fib with the swing until I see the retracement back into my entry, because I want to take the 618 fib of the swing. The swing doesn't end in here unless Monday drops. Monday, Tuesday, Wednesday drops down to our entry. But if price is heading up, which usually does, Mondays are only a continuation of Friday. So on Tuesday, Wednesday, price usually corrects to your entry, and then we are heading up Thursday, Friday, Monday. That is something I've been seeing for 2 decades now. Okay, so we adjust the fib, and just maybe by the time we are adjusting the fib, price might be heading up in here, then the 618 fib make more sense. Okay, so this is a pending order for the reason I mentioned. Well, the trend is up. The trend has been up. It's just we are like gassing out 6 months within the bigger candle, and we are dealing with some extraordinary times in trading, and you only see the losing trades and the struggle that we are doing. But just have in mind, every single hour, opening hours when the market is operating, people are wiping their accounts. We are surviving month after month, year after year. I couldn't care less who is leading the world or who is starting war in somewhere like affects the market. We will still, by the end of each month, we are either in profit or we are slightly in losing. Okay, and if I don't manage to make 2 losing months, for the next coming 4 years, then we are killing it. We are monsters in the market. Just have in mind how many people is just, it's game over. There's nothing there for them to do. It's just like they don't know how to deal with these market conditions. We are having a 0.25% losing trade. Potentially, the trade is not losing just yet. We need to see how the market opens. We are top performing, guys. Like, go somewhere else and see how people is, read the chats out there. People are, those who are honest, they are like crying their eyes out. They're just like, geez, what is happening? And but those who are telling you that they make 20-30% a month, yeah, sure, show me the money. Okay, that's just BS, and we all know that by now. So this is live coaching, live trading. So and that's a different animal. So I can definitely grab the mic and tell you where to long and short after the fact. That doesn't make you any money. So you need to be smart about this. So we are killing it. Yes, we are not making these 2 to 4% consistent on every single month. No. And let's just see how, like the month of October, we either have a great month like these 2 to 4, or we will have the biggest losing month we ever had in 8 years of coaching. Okay, and I'm not taking this personal. I know that things will be heading toward more stability, and the market hates uncertainty. Okay, EuroCAD, we were in this trade, and this was the trade when I tell people that I actually moved my stop loss to break even, and this trader said, hey, price did not touch our break even here. What did you mean? So that's what I meant, is that because this was a level that made sense to me. Okay, this low is lower than this low, and this high is higher than this high. By not closing above this swing, that means there are still some sellers out there, and we had some CAD news coming out. Okay, and we got filled 1 hour before the news. That is usually not good. Okay, and then price made a lower low, but did not make a lower low, lower close. I told everyone, if we make a lower low, lower close, that's it, it's game over. Okay, we did not do that. That means now the sellers are, pressuring price. Now the buyers are pressuring price. When you are in a long, you want to see a higher high, higher close. That means the buyers are more in control. And if you see, buyers hitting the market, not closing, that's good for your long. Obviously, the opposite for shorting. Okay, and then we exited. I moved my limit to break even. By the way, yesterday was one of the worst days so far this year. I went to barber to get a haircut. There was a severe accident. I don't know what. Someone told me that there was a truck burning on the highway. They closed the entire road. I was stuck for. It took me 2 hours and 30 minutes to get to my barber, which usually takes around 15 minutes. On my way home, then there was another accident on the other way. So it took me 5 hours to go and get a haircut. So I spent 5 hours in my car, and just oh my God. And I was like, the traffic was still. So I can, text message or answer. I'm not driving because there is nothing to drive. I'm just parking on the highway. So I came back 9 p.m. and I started to leave the work 3 p.m. Oh my gosh. So like when I type a quick message, I moved my stop loss to break, and I got stopped out. I just said, okay, no problem. And then obviously the one we exited is working out. We couldn't know that in advance, right? But now it's a new pending order. Why? We have this low, this low, this low. All of them we're taking out. Now we also have a higher high, higher close. That's good. And this is also higher high, higher close. So now we need a pullback into this level for further upside, because now we have new criterias. Okay, the weekly candle is technically bullish. Let me tell you what I mean, so there will be no misunderstanding. If I take it from here to here, okay, we closed at the 50%, at or above. So this is technically a bullish candle, a weaker version due to the color. That means price could very well be coming down into our entry before heading up. Okay, so this is a new pending order. Euro Swissie, I'm leaving this alone. Price is sitting at monthly, weekly identical neckline. We have been challenging this level for a very long time now. And we also have another non-significant neckline, just slightly lower. I marked this swing in here. That doesn't mean by default I will make this into a pending order. No, I will look at the charts and see what's happening and take it from there. Okay. Whenever I see price, it's super important to understand market structure. Okay, so market structure means that if we happen to have it, like in this specific case, this is super simple to see. Okay, we have all these levels. When we left this area, we took out everything. That means the sellers are in control. This is the type 2 of swing break. Or structure damage. Let's just call it, it doesn't matter, swing break or structure damage. So that tells me the sellers are in control. Okay, so unless we do something like this, okay, and now we will be drawing the fib from here to here and take the 618 fib. Okay, But now the sellers are in control, and this is confirming the sellers are continuing to be in control by making, when we're leaving this area, we are making a lower low, lower close. We are not wixing it. Okay, so the sellers are still in control. So when I get a swing break, I want to see how we are dealing with this level, because there is so much more into swing break than just swing break. That's why it's super easy to spot. Once you understand market structure, advanced market flow, context, then it doesn't matter which pattern you trade, it will be super easy for you to make money on a consistent basis. So therefore, I'm explaining the background story. Otherwise, I will be just showing you swing break, and then those swing breaks, 7 times out of 10, they are not generating in a losing trade. And then you get the impression that the swing break itself is the magic. But the swing break itself is useless unless you understand this. Okay? So yeah, let's just see how things goes. Euro pound, I'm just getting the thing with this pair. If you have a profound understanding of price is just stuck between weekly support and resistance. Okay, this is technically a bullish candle, a weaker version due to the color. Okay, we do have a swing break. Like I said, the swing break itself is not that. It's not the swing break that makes you the money. It's more like the context itself. I just don't know if this is heading up or we are gassing out by these 4 monthly candle, and we are actually retracing down. I am in doubt, guys, and I have lots of pending orders that make way more sense. I'm marking this yellow. I'm leaving this to your discretion. That means I'm not taking this on my live account as I speak. If I change my mind, if I see anything that justify this trade, I will let you know in the chat room. So I'm just in doubt. I'm not second guessing or freaking out with everything that happens around. No. It's just more like it's ugly and things doesn't look the way I want to see them. So I'm just leaving this alone. But if you want to take this swing break, that makes sense based on your game plan, do it. It's not taken on my live account. I'm telling you that now. If I change my mind, I will let you know before I pull the trigger. Okay? Because I won't be grabbing the mic on Thursday and tell you like, hey, I made 300 pips. You didn't take this trade? Why? No. If I take it, I let you know, and then I can grab the mic and tell you if this was winning or losing. Okay? Geez, I need to grab some water. Just give me 1 sec. There you go. The trend is up yearly, monthly, or at least monthly, weekly is super strong. Okay? And yes, we were waiting for this level, but price was too bullish to even come down to the neckline. Okay? It came down to the daily neckline. It's okay. But the main focus for us is the monthly, weekly. The daily, we just look at it in case things are like too strong or we need to time things in. Okay? What is this? A bullish weekly candle. What does that mean? The buyers are in control. The big dogs are in control. The market movers are in control. Okay? Good. That's what I want to see. When the trend is up, the bearish candles I disregard unless we are at resistance and that we have met the criteria for shorting. Otherwise, I need to wait week after week until I see this one. Okay? What did I say about what the market has taught me for the past 20 years? When a new neckline is born, price is usually coming down to the neckline before heading up. Okay, or maybe we go slightly up and then come down to the neckline, and then we are, creating another bullish candle because the trend is up. This is super up. Okay, so this closing price, the new neckline born, happens to be the 618 fib. That's great. That's perfect. That's what I want to see. And price might be heading up for Monday, at least maybe half of the Monday. Then we need to adjust the fib until the retracement comes. Okay, and you might say, oh, geez, Darko, you're saying this all the time. Yes, because there are 3 million questions in the chat room. Do I need to adjust the fibs? Unless I don't see those for like at least 3 weeks, I won't be explaining this in such a great detail. So, price is heading up. You're adjusting the fib until the retracement comes. Okay, this is a no-brainer setup. Okay, and also, this high is higher than this high. Okay. So this is the type 2 swing break when the market is telling you that the buyers are still in control in alignment with the underlying trend, which is up. Okay, good. Then we just take a fib and win, lose, draw. This is a valid trade. Euro USD, we covered that. I'm just showing you the fibs, the place. Let's just see where dollar index, by the time dollar index hits that 50% fib, which is support, we want to see where dollar is at, and then you can definitely short the weaker. You know, which one is weaker, pound or euro or Aussie or Kiwi. And then you just take that trade, and that's it. Pound Aussie, I've been waiting for this for several months. We did not touch this level perfectly. We actually, it looks like we are touching it right now. So you know, a couple of pips shy. That's, the market is not perfect. Neither are we perfect. No one is perfect. Okay, so now finally, after waiting for ages, the buyers are in control. Look at this big dude. This is a giant on steroids compared to his friends. Okay, so this is the buyers are hitting the market right now. So we need to be with them. Okay, and the 618 fib happens to be the left neckline or this neckline in here. If price continues up, we adjust the fib until we get the retracement to our entry. Okay, maybe, just maybe, this is what I think will be happening, that price will be continuing up and we will be adjusting the fib somewhere in here, and then the 618 fib make perfect sense. Okay, so don't worry if Monday is just flying away. Oh geez, all these price action movements and we are not in it. I need to chase price, but the seconds you pull the buy trigger, that's where we get our retracement and stops you out for a 5-10% loss. Okay, don't do that. I did that for many years. So right now this is the entry. We adjust and then we just take the 618 fib entry. Let's see here, nothing on the other pairs. Pound Kiwi, this was our best trade so far this month. Pain-free, perfect trade, hits target right away. And now the big dogs are hitting the market. Buyers are in control. So if this goes up, makes another higher close, we need to reconsider entering that trade again, because I exited. If you didn't exit and you had your stop loss below, then you are still in this trade. Actually, this was the entry here. Okay, this low was lower than this low, and this high was higher than this high. This was the entry. So you moved, because this was the leaving candle, because we had a higher close. Then you are risk reducing, and this did not stop you out, and you might still be in this trade. I'm not in this trade. But I will re-enter if there is any evidence for re-entry. Okay, and obviously a new neckline is born, but this is way too low, so maybe this will be heading up where this neckline becomes the 618 fib. Let's just see how things go. This is on my radar. Pound dollar, I'm just showing you the fib to see, you know, we have a new lower low, lower close, the type 2 swing break, new lower low, lower close, and we are saying that the dollar index will be heading up. If we get that retracement to that support level on dollar index, you need to see where we are at before you pull the trigger on the weaker one. Nothing on Kiwi CAD. Kiwi Swissy, I canceled the previous trade. Now the sellers are continuing being in control, and price is giving you a new lower low, lower close. Geez, I sound like a broken record deluxe. That is like, I'm repeating the exact same thing over and over and over again. let's see here. We have a new lower low, lower close. This is a type 2 swing break. When the trend, we have an underlying trend that is down yearly, monthly, weekly, daily. Okay, I do like this neckline in here, but that happens to be between the 382 and the 6183, but that coincides perfectly with the resistance level, but this might be continuing. Let's see here. I'm doing this. We might be continuing down somewhere in here where maybe the 618 fib coincides perfectly with the entry. I'm seeing the future. I have a crystal ball that this will be dropping. Obviously, I'm just kidding. If price will be dropping, we will be adjusting the fib until we get that retracement, and then that is our new pending order. Okay, so the trend is, let me just make this back again. Perfect, thank you. The trend is heavily to the downside. What I wouldn't be taking this trade if I hadn't this weekly candle action. Okay, this weekly candle action is giving me confidence that price at least until next Friday will be heading down, that we won't be breaching this swing high. That is what this is telling me. And if that happens, sure, you know, anything can happen at any time. But if you are watching charts for 20 years and you see the probability is that we won't be heading up, at least not 8 times out of 10, then if those 2 times out of 10 happens to be this week, well, that's it. I'm not taking this personal. Okay, so this is a pending order. Kiwi dollar, I'm just showing you the fib, dollar index related. I don't have anything else. There are some next week on Saturday I will be leaving to Colombia, so the Monday's PMA will be published on Friday evening my time, because I will be sitting for 20 hours to the other side of the world, and on Sunday we will be flying another taking another flight on Sunday where we'll be heading to where we will be staying for a month, or at least that area. We will be moving around 4 or 5 times to different places, but so the entire weekend I will be more in the air than on the ground. So therefore I will be doing Monday's PMA on Friday, and then obviously if anything adjustments needed, then I will just record an additional PMA before the next coming Thursday. Okay, that's it. Thank you so much for listening, and I will talk to you soon. Cheers.
So here's the key takeaway. The reasons for taking these trades never changed. No matter what's happening in the world, we follow price action and we stick to the rules. And that's the power of having a proven trading plan, which most people don't. There's no guessing, there's no flukes, just consistency. And that's exactly what Darko delivers every week through our single focus, which is the swing break pattern. So thank you so much for watching. We really appreciate it. Hey, if you got value from this, please give it a thumbs up, subscribe if you haven't yet, and we'll see you in the next one. Have a great weekend, everybody. Great trading week ahead. Take care.